If you're running a business in New Zealand, or maybe even a few of them, you know that tax time can be a real headache. Well, today we're going to break down a tool that can make your life a whole lot easier, the GST Group. So if you're an entrepreneur, you've probably felt this pain. You've got more than one business, and that means you're drowning in more than one GST return. It's just this endless cycle of paperwork and deadlines. But what if I told you there's a way around all that? Well, here it is. It's called a GST Group, and it's a system designed to let you bundle all that separate paperwork into one single GST return. You can imagine how much that slashes your admin time and compliance costs.
So let's get right into it. What exactly is a GSG group? The big idea is actually pretty simple. You get to treat your different businesses as one team for tax. One team, one return. Let's dig into the official definition. At its heart, a GST group is really just an agreement you make with the IRD. You're basically saying, hey, for GST purposes, can you just treat all these different businesses of mine as one single thing? And when they agree, your day-to-day admin gets a whole lot simpler. Now, you might be thinking this is just for standard companies, right? But nope. The term entity is actually really broad. We're talking sole traders, trusts, partnerships, even clubs and societies. That flexibility is what makes GST groups such a useful option for so many different setups. Okay, so you can't just throw any random businesses together and call it a group. There are rules, of course, and it all comes down to what kind of entities you're trying to bring into the team. The IRD basically gives you two options here. The first is pretty straightforward. It's for groups made up of only companies. The second option is what they call a mixed group, which is for when you have, say, a company and a trust. And the rules for each pathway are quite different. So for groups that are just companies, the magic number you need to remember is 66%. You have to have at least 2/3 common ownership across all of them. And the IRD can measure that in a couple of ways, either by who has the voting power, who calls the shots, or by who actually owns the value in the shares. Now, for those mixed groups, the test isn't about ownership, it's about control. First things first, every single member has to be registered for GST. And second, there needs to be a really clear control structure. Usually, that means one of the businesses in the group is in charge of all the others. Or, and this is an interesting one, you could have a person or a company completely outside the group that controls everyone inside it.
All right, so you've checked the boxes, you're eligible. What now? How does this thing actually work from day to day? Let's talk about the rules of the game. First thing you've got to do is pick one member to be the group representative. The best way to think of them is as the team captain. They're going to be the one and only point of contact for the IRD, and they'll handle all the GST stuff for everyone. So the representative does all the heavy lifting, filing the return, talking to the IRD. The other members just have to feed them the right numbers. But, and this is huge, you absolutely need to understand this, every single member is jointly liable. That means if the group owes GST, the IRD doesn't care whose fault it is. They can chase any member for the entire debt, not just their little piece of it, the whole thing. That's a really big deal. The upside, though, is pretty great. Filing one return is obviously the main win. But another massive plus is that you can stop worrying about GST on transactions between group members. That company that provides services to your other company, you can forget about charging GST on those internal invoices. The only catch is that everyone has to get on the same page with things like filing dates and how you do your accounting. But businesses evolve, right? You might buy a new venture or sell an old one. So what happens when your team roster changes? Well, it all goes through that team captain. They're the only one who can talk to the IRD about adding a new business, removing one, or even changing who the representative is. They basically hold all the keys to the group. And when a business does leave the group, all that beautiful simplicity, it kind of goes into reverse. The IRD dusts off their old individual GST number and reactivates it. And just like that, they're back to filing their own returns and paying their own tax directly. Everything's back on them. Okay, and here is another major warning. Just because you've left the group, it doesn't mean you're off the hook. Remember that joint liability we talked about? It sticks to you. An old member can still be held responsible for any unpaid GST from the time they were in the group. That risk doesn't just disappear when you walk out the door. All right, last piece of the puzzle. What if the entire group needs to be dissolved? Whether you choose to or you have to, let's talk about how you blow the final whistle. Basically, it happens in one of two ways. The first is mandatory. If something changes and you don't meet the rules anymore, like that 66% ownership drops, then you have to cancel. The other way is voluntary. You might still be eligible, but maybe the group just isn't working for you anymore. As long as everyone agrees, you can just decide to call it a day. And what happens next is pretty much exactly what happens when one member leaves, just for everybody. The group registration is canceled, the IRD switches everyone's individual GST accounts back on, and just like that, everyone is back to filing their own separate returns. It's a full return to square one. So that's really what it all boils down to, isn't it? On one hand, you've got this incredible way to simplify your paperwork, but on the other, you have this very real shared financial risk. You have to ask yourself, is the ease of filing one return worth making every one of my businesses responsible for everyone else's tax debt? That's the crucial question you've got to answer before you jump in.